In a dynamic financial landscape, the world of exchange-traded funds, ETFs, and hedge funds continues to evolve. Here, we explore the launch of a new dividend-focused ETF by the Bahnsen Group, TBG, increased interest in the Schwab U.S. Dividend Equity ETF (SCHD) among hedge funds, and the significance of consistent dividend growth as a key financial indicator. TBG launches Dividend Focus ETF. The Bahnsen Group, TBG, a wealth management firm, recently introduced the TBG Dividend Focus ETF, NYSE ARCA, TBG. This actively managed ETF sets its sights on publicly traded companies known for their history of growing dividends. While dividends are a crucial component of investment performance, TBG emphasizes that the growth of dividends is even more critical. Companies that consistently increase their dividends not only provide investors with additional income but also the potential for compounding interest. This steady dividend growth also serves as a strong indicator of a company's financial health. TBG's founder and CIO, David Bahnsen, highlights that it's not enough for a company to merely pay dividends to shareholders; those dividends should be consistently growing each year. The firm's investment strategy is built around the principle that a company's ability to grow its dividend over time speaks volumes about its financial well-being and sustainability. The TBG Dividend Focus ETF doesn't track an index and typically invests in 25 to 35 small, mid, and large-cap US-based companies. Preference is given to companies with dividend yields exceeding the S&P 500's average yield and a history of annual dividend growth of more than 5% over a 5 to 7-year market cycle. Companies are selected through thorough bottom-up fundamental analysis, considering factors such as balance sheet strength, earnings growth, leverage ratios, free cash flows, and payout ratios. The expertise of the company's management team in allocating capital strategically is also a critical factor. The Bahnsen Group actively manages the ETF's portfolio, with Madison Avenue Financial Solutions LLC as the sub-advisor, and Empowered Funds DBA Advisors serving as the fund advisor. The strategy reflects a growing trend among wealth management firms and family offices launching individual ETFs, making niche strategies more accessible to non-clients. Hedge funds' interest in SCHD. The Schwab U.S. Dividend Equity ETF, SCHD, experienced a bullish trend in the third quarter of 2023, as revealed in the latest 13F filings. 5 out of 8 hedge funds holding SCHD increased their stakes during this period, resulting in a 2.99% rise in SCHD holdings across all funds. While 13F filings only report long positions and may not provide a comprehensive view of a fund's overall strategy, they offer valuable insights into market trends and investment patterns. The increasing interest in SCHD among hedge funds indicates a positive outlook for this ETF, attracting attention from analysts and investors alike. SCHD is known for its consistency in raising dividends for 12 consecutive years, making it an attractive option for investors seeking stable returns. The ETF also boasts low price volatility, rendering it a potentially safe investment during volatile market conditions. As of Q3 2023, SCHD had a market capitalization of $47.19 billion and offered an appealing dividend yield of 3.74%. Its recent performance indicated a total return of 2.76% over the past week. TBG's Dividend Focus ETF emphasizes growth. TBG, overseeing assets of $4.6 billion, has unveiled the TBG Dividend Focus ETF, emphasizing its belief in consistent dividend growth as a crucial indicator of a company's financial health. This ETF targets US-based companies, actively seeking 25 to 35 mid- and large-cap companies with dividend yield surpassing the S&P 500 average and demonstrating over 5% annual dividend growth over 5 to 7-year market cycles. The investment strategy is rooted in deep fundamental analysis, considering factors like balance sheet strength, earnings growth, leverage ratios, free cash flows, and payout ratios. Companies are subject to removal from the ETF if their dividends experience significant declines, if the investment thesis deteriorates, or if their ability to sustain or increase dividends is compromised. David Bahnsen, the founder of TBG, underscores that not all dividends are equal, highlighting the importance of diligent selection. TBG actively manages the ETF's portfolio, with Madison Avenue Financial Solutions LLC acting as the sub-advisor and Empowered Funds DBA Advisors serving as the fund advisor. This approach is reflective of the growing trend of wealth managers and family offices launching niche-focused ETFs, offering a unique investment strategy to a broader audience. Market observations and analysis. The financial landscape is constantly evolving, with investors continually seeking innovative and reliable investment opportunities. In this context, the articles discuss the launch of the Bahnsen Group's, TBG, Dividend Focus ETF, the increasing interest among hedge funds in the Schwab U.S. Dividend Equity ETF, SCHD, and the significance of consistent dividend growth as a key financial indicator. Let's delve deeper into these topics and provide additional market observations and comments. The TBG Dividend Focus ETF, TBG. The launch of the TBG Dividend Focus ETF by the Bahnsen Group, TBG, signifies a growing trend among wealth management firms and family offices to create niche-focused ETFs. This development is a response to investors' demand for more tailored investment strategies. The ETF's emphasis on consistent dividend growth is in line with the broader market's appreciation for dividend-paying stocks. Dividends offer investors a steady stream of income, which is especially attractive in uncertain economic environments. The idea that dividend growth is more critical than simply paying dividends resonates with the market's focus on sustainable and reliable income. The approach of actively managing the ETF's portfolio stands out in an industry where many ETFs are passively managed. This allows for flexibility and the potential to adapt to changing market conditions, which can be a valuable feature for investors. Hedge funds' interest in SCHD. The increasing interest in the Schwab U.S. Dividend Equity ETF, SCHD, among hedge funds during the third quarter of 2023 highlights the ETF's growing popularity as a stable investment choice. SCHD's consistency in raising dividends for 12 consecutive years has made it an attractive option for investors seeking reliable returns. Hedge funds are known for their rigorous research and due diligence processes. When several hedge funds increase their stakes in an ETF like SCHD, it can serve as an indicator of their confidence in its performance. While 13F filings may not provide a complete picture of a fund strategy, they offer valuable insights into market sentiment and investment trends. SCHD's low price volatility and appealing dividend yield make it an attractive choice for investors looking to navigate volatile market conditions. In an unpredictable financial landscape, the stability offered by SCHD can be particularly appealing. The significance of consistent dividend growth. The emphasis on consistent dividend growth as a key financial indicator aligns with the broader market's preference for companies with a history of financial stability and responsible capital allocation. Investors have a growing interest in dividend-paying stocks because they provide an additional source of income, which can be crucial for long-term financial planning and retirement. Moreover, companies that consistently increase their dividends demonstrate a commitment to shareholders and a strong financial foundation. Consistent dividend growth can serve as a vital indicator of a company's financial health. When a company can raise its dividends over time, it suggests that it is generating sustainable cash flows and is confident in its ability to maintain or improve its financial position. In a market where volatility and uncertainty can create challenges, the appeal of investments that offer reliable income and demonstrate financial strength is evident. Additional market observations. ETF proliferation. The launch of TBG's Dividend Focus ETF is part of a broader trend in the ETF industry. ETFs have become increasingly popular among investors due to their diversification benefits, cost efficiency, and transparency. The market has witnessed a proliferation of ETFs catering to various investment themes and strategies. This trend has made it easier for investors to access niche markets and target specific investment objectives. Wealth management firms and ETFs. Wealth management firms and family offices entering the ETF space is a notable development. These entities are leveraging their expertise and resources to create unique ETFs that reflect their investment philosophies and strategies. This trend indicates a shift toward more tailored and specialized investment products. Dividend-paying stocks in uncertain times. In uncertain economic and geopolitical times, dividend-paying stocks gain prominence as they provide a stable income stream, which can serve as a financial cushion during market downturns. Investors are increasingly looking for investments that offer both growth potential and income stability, and dividend-focused ETFs like SCHD and TBG's ETF align with this demand. Due diligence and research. The interest of hedge funds in SCHD highlights the rigorous research and due diligence process that sophisticated investors undertake. Hedge funds play a vital role in identifying opportunities in the market, and when they show confidence in specific ETFs, it often attracts the attention of other market participants and analysts. Market capitalization and dividend yield. The market capitalization and dividend yield of SCHD reflect its position as a significant player in the ETF space. A market capitalization of $47.19 billion indicates substantial assets under management, while a dividend yield of 3.74% is attractive in a low-yield environment. These metrics make SCHD appealing to income-focused investors. Total return. SCHD's recent total return of 2.76% over the past week is indicative of its ability to provide returns even in short-term periods. This performance is notable, considering the potential volatility and market uncertainties that can influence returns over such time frames. Economic and market uncertainty. The backdrop of economic and market uncertainty in recent times has reinforced the value of dividend-focused investments. In times of economic turmoil, investors often seek refuge in assets that offer income and stability. Dividend-paying stocks and ETFs have been considered a safe harbor in such conditions. In conclusion, the financial landscape is continually evolving, driven by investor preferences for income, stability, and tailored investment strategies. The launch of niche-focused ETFs and the interest of hedge funds in dividend-oriented investments reflect the market's response to these demands. Consistent dividend growth remains a crucial financial indicator, especially in turbulent times, as it signifies a company's financial strength and commitment to shareholders. Investors and financial institutions are adapting to these trends, creating a dynamic and evolving investment environment.